All right, let's get straight to it. The crypto rulebook, it's been completely torn up. Everything that worked for the last decade is now a liability, so I need you to forget what you think you know. We are in a brand new era, and this is your insider's briefing on how to play it. The ground is shifting beneath our feet right now as we speak.
And this quote just says it all, doesn't it? That simple game of buying Bitcoin, watching your company's stock price explode, then issuing more shares to buy even more Bitcoin, that playbook is dead. That feedback loop, what they called the infinite money glitch, it didn't just slow down, it has completely shattered. The market is sending a message, and it is loud and clear.
And here's the proof in numbers. A 24% drawdown in just the first quarter of 2026. Look, this isn't just a dip. This is a full-blown, system-wide stress test, and it is exposing every single weakness, every lazy strategy that was hiding out in the open during the bull run. The days of easy mode are officially over.
So this brings us to the single most important question you should be asking right now. If the old game is over, what's the new one? What are the new rules? Because this is what's going to separate the survivors from the wreckage in this new world. And make no mistake, there is a new game. It has a new engine, new players, and understanding it is absolutely everything.
First up, we're living through the great crypto shakeout. This is the big one. It's this fundamental shift away from just passively holding an asset, hodling, to actively managing it just to survive. The mantra isn't never sell anymore. Now it's get smart or get out. And this right here perfectly captures the complete reversal. The old way, this accretive dilution, it was genius in its simplicity. But just look at the new reality. When 40% of these companies are trading for less than the Bitcoin they have on their books, the market is literally screaming that their strategy is destroying value. The very structure of the company has become the risk.
So, if the old strategies are broken, what's actually replacing them? Well, to get that, we have to understand the new technology that's powering this whole shift. See, this is about way more than just Bitcoin now. There is a far more sophisticated financial machine coming online, and that is the engine that's going to drive the next cycle.
And at the absolute heart of this new machine is decentralized finance, or DeFi. The idea is revolutionary. I mean, think about it. Take everything a bank does, lending, borrowing, trading, and just build it all with code on a blockchain, completely open for anyone to use. They call them money Legos for a reason. Developers can just snap these pieces together to build brand new, incredibly powerful financial tools without asking anyone for permission.
Now, the engine that makes this DeFi machine run so damn efficiently is a new system called proof of stake. So instead of using just, insane amounts of electricity and computing power to approve transactions, this system uses economic incentives. Validators put up their own crypto as collateral. They literally have skin in the game to keep the network secure and honest.
And this shows you the critical difference. Proof of work secures the network with raw, brute force computational power. It's all about energy. Proof of stake, on the other hand, secures the network with capital. It's a massive shift from a security model that's based on physics to one that's based on pure economics.
And the results of that shift to economics? A jaw-dropping 99% plus reduction in energy use for Ethereum after it made the switch. I mean, come on, that's not a small improvement. That is a quantum leap in efficiency. It completely silences one of the biggest criticisms of the technology and makes the entire system sustainable, scalable, and ready for the big leagues.
And with this new, hyper-efficient machine humming away, the big money is finally getting off the sidelines. The suits and ties have arrived. And listen, they are not just dipping their toes in the water anymore. They are here to build, they're here to acquire, they're here to dominate.
You just have to follow the money. Venture capital didn't just bounce back in 2025. It absolutely surged. $7.9 billion. That's a 44% jump. This isn't tourists throwing money around. This is the smart money making huge, high-conviction bets on the future of this infrastructure.
And it's only speeding up. The M&A market is absolutely on fire, up 59% in just 1 year. The mindset is totally clear. Why bother building when you can just buy? We're in the middle of a corporate arms race to consolidate, to acquire the talent and the tech you need to own the financial platforms of the new digital world.
So this flood of institutional money has created a totally new kind of operator. The old guard, they were the promoters. They relied on hype, on sentiment. But the new guard, they're the asset managers. They don't see Bitcoin as some pet rock you just hold on to. No, they see it as digital oil, a productive, active, yield-bearing asset that fuels this whole new financial machine. Which, of course, brings us to the most important part of this whole briefing. Where are the real opportunities?
Where is this new machine, now fueled by Wall Street's billions, actually pointing? Because this is where we're going to find the next trillion-dollar wave.
And the biggest opportunity of all is what we call real-world asset tokenization. Put simply, it's putting traditional assets, we're talking stocks, bonds, real estate, you name it, onto a blockchain. This is the bridge. This is the superhighway that trillions of dollars of value from the old world will use to pour into the new one. And it's going to create liquidity and efficiency like we've never seen before.
And please, don't think for a second this is some far-off futuristic trend. $36 billion. That's the value of real-world assets that are on-chain today. It's happening as we speak. We already have tokenized UST bills powering new on-chain money markets. This isn't a science experiment. This is production-grade infrastructure, live and running.
When the CEO of the world's largest asset manager says something like this, you have to listen. Larry Fink isn't just making a prediction. He's describing the exact future that his company is actively building. This is it. This is the ultimate validation, a single digital ledger for every single asset on planet Earth.
But okay, to trade all these different assets in one digital wallet, you need a native currency, right? That's where stablecoins come in. They are the essential plumbing, the transactional layer, what you could call the internet's dollar. They provide near-instant settlement for a tiny fraction of what the old systems cost.
And what's really wild is where the smartest money is placing its bets. Just look at this. 40 cents of every single venture dollar in 2025 went to the intersection of AI and crypto. This is the convergence of the two most powerful technologies of our generation. Just imagine it. AI agents that can operate on their own, transacting and managing assets on a global decentralized network.
Okay, so let's bring it all home to the final and most critical part. We've seen the old world collapse, and we've seen the new machine rise up. So now, what is your playbook? How do you position yourself to not just get through this, but to actually thrive in this new era?
Well, the new toolkit requires you to think like an asset manager. You've got to make your capital productive. First, there's staking. You get to participate directly in securing the network and earn rewards for it. Second, there's lending, putting your capital to work on DeFi platforms to earn interest. And for those who are a bit more advanced, there's yield farming, actively hunting for the best returns across different protocols. The core idea is exactly the same for all three. Shift from being a passive holder to being an active participant.
We're going to end with this quote one more time because you cannot overstate how important this is. The walls between traditional finance and digital assets, they aren't just getting lower, they are being systematically demolished. We are moving toward a single, unified, tokenized market. This convergence is the great rewiring.
So as every stock, every bond, every piece of real estate becomes just another token on an open global network, the old institutions will be challenged like never before. And that leaves us with the real billion-dollar question for 2026 and beyond. Who is going to step up and build the new Wall Street?